Over the last couple weeks, 3 weeks in particular, the VIX hasn't closed below 17. And if you're not familiar with what the VIX is the volatility index to the S&P 500. And this is something I use greatly in when I'm buying or selling options on the S&P 500, in particular the SPY. And so what I've noticed over the last 3 weeks is we've had higher lows every week for the last 3 weeks. What does this mean? Well, typically when you see trend shifts in markets, you'll see higher lows and higher highs when it's going higher versus lower lows and lower highs when it's going negative. What I'm noticing is the VIX, which measures the volatility of the S&P 500, it keeps going higher lows and to a point higher highs. I don't know if this means it's consolidating in like volume. So think of it as a spring, and that spring is being compressed to at some point it's going to explode higher. And what I think may be happening is that volatility is pushing, or that VIX is indicating, one, we're stepping downward on the S&P 500, so we're trending downward. But we're also possibly some sort of, event is brewing in the future. And if you go back and look at historical events, there was always a leading indicator. If it was the bond market in treasuries and the fall of the treasury yields prior to COVID and the starting of the lockdown back in March of 2020, or other times throughout history. Somebody pointed out recently, prior to 9/11, the compression of the 10-year or the treasury market, 10-year yields in particular, started to go down pretty rapidly because there was maybe rumor or knowledge of 9/11 happening. I don't know, but these are things that I look for when I'm investing. So I ended the week, had an epic week. I was up 25% on my SPY option investing. You can call it trading, whatever you want to call it. But what I've been following heavily is that VIX, and I base my trades off the movement of the VIX. And and I'm thinking more short term, so like I put on a trade on Monday, exited on Tuesday, put on a trade on Wednesday, exited Wednesday, and then put a trade on Thursday and exited early Friday morning. And had a great week. Hit my goal that I set on Sunday for the overall week, what I wanted to achieve dollar-wise, and I did it, and I was pretty stoked. But what I keep looking at is the volatility compression. I think I'm seeing that compressing of that spring, and I'm wondering, are we about to see something in the market? The other thing I'm looking at is that 10-year treasury and that yield. And that yield is staying below 0.13%. Now, some of you who are sort of new to this and new to my focus on U.S., the bond market in general, but treasuries in general, is that I believe the bond market is the truth. And I believe that this is where you can see what the world is truly thinking. Risk on or risk off. We're seeing a compression in yields, yields going down, values going up, because one, a seeking of 5-star collateral, number one. Number two, there is a shortage of treasuries in the market. If I remember right, the U.S. Treasury did not issue any new treasuries in the month of June, and I believe not in the month of July, which means what is out there is getting gobbled up. And that gobbling up is pressing yields downward. Well, to me, there's a clamoring for risk-off assets. And yes, if they had, would issue bonds or treasuries, the Treasury would issue treasuries, maybe we'd see yields go higher. And we possibly could, but I don't know. I have a feeling, though, in combination of all the push on getting a vaccine in this country and really on a global scale. I mean, you're seeing it in the Olympics. These people, there's nobody in the crowds. They're not allowing, there's nobody in the stands. They're not allowing anybody to be at these events because I believe Japan is the lowest vaccinated country in the world. But what I'm seeing and thinking is this whole Delta strand is a little bit bigger than we think it is. See, we haven't been in an environment where like really mean things can happen. I was thinking the other day about, my parents have been on my ass about getting the vaccine and getting my family the vaccine. And I've been hesitant because I'm very much a person who just doesn't want to put a bunch of crap in his body. I already on 4 medicines, blood pressure, cholesterol, of course my ADHD medicine, and my low active thyroid. So any more crap I could put in my body, I'm really against. But what got me to thinking about this whole COVID thing and the vaccine was, this is going to sound really morbid, but if I wanted to wipe out a great deal of amount of people, how would you do it? And the answer is you create a virus that infects millions of people, if not billions of people, and is highly contagious. And I find it really fascinating that all of a sudden we've gone from COVID, in 2020 to all of a sudden there's, I believe, 4 variants of COVID out there, and it's mutating fast. And this Delta COVID version is really highly infectious, blah, blah, blah. I live in Florida. Look at where all this stuff is migrating to, and guess what? It's in my backyard. So I broke down and finally started the process of getting vaccinated. I've had my first shot. I can't say I'm thrilled about it, but if it keeps me alive for the next 40 some years, I'll be pretty stoked. My family's is doing the same. So, I don't know. Anyways, I'm really skeptical about when it comes to putting stuff in my body. Bringing this back to my point of, if this Delta version is as bad as the media is saying it is, well then eventually you're going to have people forced to lock down again. Maybe on a federal standpoint, they'll initiate. I know our governor here is very anti all that, was very first to open up for the most part. He's very anti the mask situation. I saw a headline recently in the news about him complaining about, kids going to school with masks, this, that, and the other. And I get it. My question is this really the thing that is causing volatility to have higher lows and starting to compress and look like a spring that could spring higher? Also, is this part of why we're seeing a risk-off assets happening in the treasury markets? I don't know, but these are things that I am following, and I think it's important to follow the behavioral assets, things that move prior to events. And we have had a number of events in history, and now we're in a state where you have media who is blowing stuff up to be greater possibly than it is. And you're seeing these risk-off assets are taking basically a defensive position. So that is what I am following. The VIX is a big part of it. The treasury market or bond market is a bigger part of it. But also the lack of participation in the stock market. So for instance, the S&P 500, what you have seen this market, or the S&P 500, achieve all-time highs and all this, is a lot to do with the fact that 10 companies essentially are driving the S&P 500, which is composed of 500 diversified companies. And you're seeing them go higher, whereas the majority of the companies in the S&P 500 are actually going lower. And so when Amazon came out last week and said basically, everybody said they were disappointed earnings, but who wouldn't? In retrospect, it's like you're comparing year over year, which a year ago everything was super crappy. But also, from a quarter to quarter standpoint, these companies are, they're coming off basically a high, and they're not going to perform as well. And we saw, the same sort of commentary with Apple, Facebook. Anyways, these are the big drivers of the indexes: S&P 500, the Qs, NASDAQ 100, or NASDAQ in general. And though their sort of topping is starting to show in the weekly performance of these indexes. And this is where I combined all this together, and my feeling is we're going to see another retracement, possibly next week. How much, I don't know. 10% is typically a good retracement. That's a good retracement, reorganize, reset, move higher. And that very well could be. But I am still going to keep following that position of what is the VIX doing, what is the Treasury market doing, and how are they performing in relation to the indexes. Those are my leading indicators. And so with that being my leading indicator, wow, my autofocus is not focusing, is it? Hey. Anyhow, so that being said, I think this is what I'm following. That's what I'm following, and hopefully this is helpful for you this coming week. But what I would say is, risk manage, be cautious. Right now I've got a ton of cash because really I'm sort of the way I'm managing my portfolio is on a event-driven or movement rate of change in the SPY and the triple Qs. It's pretty much, that's all I'm investing in right now. I do own crypto. I own Ethereum, Bitcoin, Cardano, Polkadot, and AMP, I forget the name of the company. And I'm diversified in there, but there's more of, if I have a long-term position, that's my long-term positions. And so far this week, they've paid off pretty well, and they're doing well. So manage your risk. Take a look at the VIX. Look at the VXN, which is the volatility index for the NASDAQ 100. Look at the MOVE index, which is the volatility index for the Treasury market. And look at what they're doing. They're really good indicators of what is happening, and also, of course, watch the bond market in general. And if you see, my feeling is things are going to go bad when we see a double-digit percentage move in a matter of hours in the Treasury market. Not a drawn-out 8-hour, 10-hour, or 8-hour, 12-hour, 24-hour kind of drawdown like we saw a couple Mondays ago on the 19th of July. But things go bad, really bad, you're going to see double-digit moves percentage-wise in a matter of hours in the Treasury market, and then really something's up. Something's really up. So hopefully this has been helpful. I am trying to post at least once a week. I'm just trying to give good content and good place to be. I believe the smart money, there was a question on my last video about smart money. Where is it going? I believe it's taking a position of risk off. I believe a lot of the big hedge fund, institutional funds have basically taken a bath in some way. So they have to deleverage and de-risk. So they're reorganizing their portfolios and are looking for better entry points. And I think that's why you're going to see some pullback in the equity indexes and rise in the bond market indexes over the next week or so, or a couple weeks. And you're going to see a rise in, of course, gold, as you're seeing, and of course in Bitcoin and crypto. That's my opinion, purely educational. This is not advice. Please always do your due diligence, and most importantly, always live loud on your terms, live your life, because at the end of the day, when you're all done, minutes, seconds before you're about to check out, it's only you and your higher being and your beliefs, and it's all you can take with you is your memories. They don't load up your crap and take it with you. So live loud.